Hello everyone. I'm so excited to do today's video. I'm going to reveal the 3 investing strategies I use when it comes to stock investing. They are growth, value, and dividend stocks. Now, the reason why I'm creating this video for you is because I wish when I was starting out, someone created this video for me. It would have saved me a ton of time and pain, being emotional pain, if had someone had told me what these 3 investing strategies mean and what investing strategy is it's suitable for a certain type of person. I'm going to let you know how these stocks behave in the stock market so that you can make an informed decision when you decide to buy a growth stock versus a dividend stock versus a value stock. You could be more prepared when investing in those types of stocks. And most importantly, I'm going to share some strategies that you can use if you are starting out investing in stocks or restarting in your journey so that you can come out maximizing your profits or coming out maximizing being able to sleep at night when investing in stocks. So if you're starting out in your 20s and 30s, you got to check out this video today. Hey everyone, if you want me to create more of these videos for you, please smash that like button, hit it, hit it, hit it, so you let me know to create more of these videos for you so that you can learn to invest with confidence, conviction, and clarity so that you can maximize your profits because we all need money to actually do a lot of things in life, like take career breaks, build a nest egg, to get our kids, pay for our kids' tuition, or whatever you want to do in life. It takes money. So this is what Financial Nirvana Mama channel is all about, is to get you and accelerate your journey to financial nirvana. So please, if you're watching this video and you haven't subscribed to my channel, please hit the subscribe button and that bell notification button to get the latest and greatest videos coming to you. Plus, it's free. And of course, if you're new to this channel, you got to do the same. Hit the subscribe button and that bell notification button. So let's get back with the video. Knowing these 3 different investing strategies will help you build a better stock portfolio. Yeah, I wish someone had told me this. I mean, I've read a ton of books on dividend investing, a lot of books on value investing. There actually isn't a lot of books on growth investing, but I've read them individually and I didn't recognize that you actually need to be pretty good at 3 to actually build an awesome stock portfolio. Now, of course, I'm going to be diving into like being able to pick a stock. And before wasting a ton of your time, if you realize like you're not a person that take the emotional stress of watching the stock market go up and down and not basically not be able to have confidently invest in stocks, individual stocks, then just please just invest in index. Like there's the Nasdaq index, there's the S&P 500. That way you just passively invest in the stock market, and basically if the stock market does well, your index funds will do a-okay. So there are 3 investing strategies typically an investor can use to invest in the stock market. Now, one of the best investors, I would, in my fair opinion, is to use all 3, depending on how the market is doing. And I'll jump into that also a little bit later. So let's dive into growth stocks. Growth stocks are typically companies that grow at massive, massive rates. They just grow and grow and grow. A great example is Tesla, which has grown, I think, over 800% in the past like year. That's example of a typical growth stock. Now, and not every growth stock behaves like this, but I would say on average, a growth stock is determined by its revenue that's growing more than 10% year over year, meaning its revenue is growing year over year over year, at least 10% year over year. And typically growth stocks, the price per earnings, which is essentially its stock price compared to its earnings, is really, really high. And it's because it's growing at such an accelerated rate that the price per earnings is something like that's like out to lunch. Like I think Tesla's like over 900, which probably like for someone who's like newer to the stock market, would realize like, hey, I'm gonna stay away from these stocks because honestly, the growth stocks are actually the hardest to invest in, mainly because they're so volatile. Like they can go up 10% in one day, and yet in over the next 2 days, they can drop 15%, and that's like normal. Now, typically in these growth stocks, another sign is that they do not have any dividends because they whatever profits that they make, they re-inject it back into companies so that they can accelerate their growth. So really, they don't issue out any dividends. They probably more profits are going to be fairly slim, especially in a rapidly growing company because they're going to reinvest their profits and their revenue back into the company so that they could grow so much faster. Another example of a growth stock is Shopify. Now, the reason why growth stocks are so popular is because investors, when they buy growth stocks, like me, I'm a big growth stock investor. Not solely, I mean, this is just, it does take up a bigger proportion of my portfolio. And the reason why I really like them is because they grow so much faster than, say, a dividend stock versus a value stock. Now, I'll explain why you should still invest in those dividend stocks and value stocks in a little bit later. But all to say is that to me, be a great investor is typically you deploy all three strategies and you know when. I would say, word of caution again, growth stocks are super volatile. If you are new to the stock market industry, I would actually caution jumping into the growth stock because you have to be mentally prepared to see all the ups and downs in the stocks. And I'm going to share a couple strategies a little bit later on how to do it maybe more systematically so that you build your confidence, your clarity, conviction when investing in stocks, and your emotional, I guess, so that you can balance some of your emotions going into the stocks and you're more prepared. So the second one is value stocks. Now, these stocks are typically they're priced in the stock market at a certain price, but really they're actually on sale. That's the simplest I can say it. Like honestly, their financials and their fundamentals are just amazing, but for whatever reason, the stock market is not pricing it like it should be priced based on its amazing revenue, based on its amazing financial sheets. Now, a great example of this is Facebook. Now, I know Facebook has done a quite a it has still grown quite a bit, and some people will even argue that it is a bit like growth stock. Recently, it is a growth stock, but I would say in the past like 5 years, it was definitely not a growth stock. People were definitely undervaluing Facebook because of all the different types of, I guess, issues they were facing, the legal battles that they're facing. You know, Cambridge Analytics is one of them. Another undervalued stock that is a great example is actually Apple. Now, Apple's now for sure a growth stock, but if you were to look at, say, 5 years ago, its price per earnings was actually less than 15. That's why Warren Buffett, who's a great example of a value investor, was buying a ton of shares of Apple stocks because he recognized that that company was simply undervalued and the stock market really wasn't pricing in what that company was worth. So, a couple key takeaways about a value stock is that it typically has a lower price per earnings ratio. And secondly, it has strong, amazing fundamentals and financials. It's like a cash cow, yet the stock market is not pricing what it should be. So, really, the investors who are value investors are hoping to buy these stocks at like sale price until the stock market recognizes its like amazing potential and what this company is about, then it will price what the stock should be at. But you know, essentially, you have to recognize that these stocks are really cheap right now. Now, the third strategy is income stocks. So really, they are the dividend players. Like examples are Enbridge, RioCan. So you got to check out those videos. I have them up here. Now, these ones are typically companies, for sure companies actually, that pay out dividends every single year. Now, a couple signs of knowing that it's for sure. Obvious takeaway of an income stock is that it pays out dividends to you. Secondly, is that the stock is actually very boring. Think about banks, utilities, telecommunications, they're boring. They just have repeatable revenue, they have reoccurring cash flow, and then they don't really know what to do with a lot of its cash. So what it does is it deploys a lot of the cash back to the shareholder because its growth is actually slowing down. So typically you'll notice in these types of stocks, the yield is around, fairly 3 to 5 to 6%, and they are been around for a very, very, very long time, and they are like well known in the industry to be big dividend players. Being mean, they've been paying dividends for a very, very long time, like Enbridge, which is paying dividends for the past 65 years. Now, the reason why people love income stocks like dividend stocks is that they issue income back to you every quarter or sometimes every single month, like Ryokan, and you get basically a paycheck every single month or every quarter. So that's why income investors love them. Typically, it's someone who's actually near retirement or in retirement who likes reoccurring revenue, or who's wanting to be more a safe and cautious investor would invest in dividend stocks. Now, the thing about those three investing strategies, you'll notice that I did give examples of Facebook and Apple being undervalued for a very long time, like in the past 5 years, and then all of a sudden they've accelerated to become a growth stock. And also Apple is actually a dividend player, but their yield is very, very low. So I guess what I'm trying to say is that stocks can transition from being a dividend stock and then transition into become a value stock where people are just not pricing in the stock what it should be worth. And then all of a sudden, if it gets like, for example, great leadership or something like they got an awesome new product, they can also accelerate up to a growth stock. Now, these situations are very, very rare. I can't really think of many other than just a few of the stocks that I've invested in. But typically, there's just stocks that are just dividend players, and that's all they are. And then value stocks, a lot of the value stocks can sometimes become a growth stock. So it's actually much easier to transition from a value stock to growth stock. Then all of a sudden, when the growth stock starts growing really, really big, they eventually, during its life cycle as a stock, can plateau, and then it stops growing that fast and then could become a dividend player. A lot of stocks are like that, and they've transitioned from being a growth stock to then becoming a dividend player because they just don't know what to do to grow that much more, or they're just not creating that many innovative products. So then they start issuing dividends, and then they become a dividend paying stock. Now, this is something I wish someone would have told me a long time ago, and that is doing a litmus test, like so that you can easily determine which three investing strategies you are using when you're choosing stocks. So, growth stock, a great litmus test is that if you invested $1,000 into a growth stock, it would magnify really, really fast. Like looking at like over 20% probably return on your investment every single year. That's a great litmus test to say, like, say in 5 years, that $1,000 all of a sudden becomes more than $2,000 in 5 years. That's the litmus test when you invest in a growth stock. So examples of growth stocks are Tesla, Apple, Amazon. Amazon's huge. Shopify. Those are growth stocks, and they have really, really high price to earnings. Like probably like you can't even. It's like not even rational. Like you can't understand it because it's just growing so much, and people are willing to pay really, really expensive prices for that stock, hence why it has a very high price per earning. Second one is dividend stocks. A great litmus test, say you invested $1,000 into a dividend stock. Well, an obvious one is that the stock will have a dividend, a yield there, and it'll show the percentage of yield that it pays you annually. So that's a great sign of a dividend stock. Another great like example of a litmus test of a dividend stock, if you invested $1,000, your $1,000 may kind of be only like $1,200 over 5 years. So really it grows super slow. It's like a snail because it returns a lot of its income back to you in monthly or quarterly payments. Hence why its growth is so slow. Now, of course, there's oddballs in there. I'm just talking about the average, but typically dividend stocks grow slow. A great example of a value stock is that you would have invested $1,000, say into like Facebook, say 5 years ago, it would have done nothing for so long. That's how you know when you have a value stock. And then all of a sudden it just explodes. It starts growing. It catches up. The stock market recognizes that potential or recognizes the beauty in that company, and then the stock price starts reflecting what it should be worth. So a great litmus test is that you invest $1,000 and it literally doesn't do anything for 2 to 3 years, and then boom, it starts growing. And that's when the stock market catches up and recognizes it. So Apple was a great example where Apple was trading at like less than 15. I think at one point it was like 13 price per earnings, because the iPhone sales, everyone's just saying, oh, the iPhone sales are plateauing for years. And so people didn't recognize the growth in Apple, and it just actually did nothing. Didn't do a lot for the first couple years. Now, this is probably what some of you are waiting for. I'm going to talk about strategies I would have done if I were starting out in my stock investing journey or restarting in the stock investing journey. So, like I promise a couple strategies you can start with if you are in your 20s and 30s and you are starting to invest in stocks. I would say if you are looking to maximize profits and maximize your gains in the stock market, then you should, I would say, like if I were to look back and talk to myself, I would say, because of the stage I'm in, because of the amount of years I have, I would just tell myself, invest in growth stocks because you have so much time to ride out that volatility. Now, of course, if you're super new to stocks and you don't like that volatility, because not everyone can take the emotional stress and pain watching your stocks go up and down, I would say first, don't look at the stock market day to day. Just invest for the long term and you'll be fine if you're investing young. But if you can't handle the volatility, like for example, this is a great litmus test. If you bought a stock that's like, say, $500 per share, and then it goes down $100, so it's like $400 a share 6 months from now, and that gives you stress, then that's probably a litmus test to tell you maybe you shouldn't invest in growth stocks. So I would start with, hey, if you're cool with not maximizing your profits, but you just want to just see, get yourself in the stock market, then I would say start with dividend stocks. They are boring, but they are predictable, but they don't give the best returns. In fact, some would argue that they underperform the stock market compared to growth stock. But I think that if you can't handle the volatility and you just want to get some reoccurring revenue, then invest in dividend stocks. And at least then you can grow your risk tolerance. And maybe you're like, hey, I can do this. Then you can start growing into buying value stocks, which are much easier to figure out, like its valuation. And when it's on sale. And then you could build up your confidence and your risk tolerance to buy growth stocks. That's how I would start out if you're not into volatile stocks. Now, the last takeaway I want to tell you for all those who are starting out or restarting in your stock investing journey, when it comes to those three investing strategies, the easiest way to invest out of those three strategies is number one, dividend investing strategy. Number two, then, is value investing. There's a ton of books on value investing. I've done a video where I help you learn how to figure out the fair market value of a stock and when to start buying it when it's like on sale. So check out that video here. So the second strategy is value investing. The hardest strategy is growth investing because it includes a lot of research and digging to figure out what its future projections are. So basically, there's a ton of forecasting, and a lot of this financial position may not be super strong, or because it's growing a lot of its profits and reinvesting a lot of its profits back into the company. So its cash flow might not look as perfect. Now, there's some exceptional companies like right now, Microsoft is a growth stock and has it's in a beautiful financial position. Same with Google, but those are exceptions. I mean, a lot of growth stock like Tesla is really hard to evaluate. So growth investing is definitely the hardest investing strategy. So again, it's dividend is the first one, is the easiest one. Then second one is value investing, which is basically buying stocks when it's on sale. And the third, the most difficult one, is growth investing. A couple of key takeaways is if you're in the bull market, growth investing is beautiful, of course, because bull market means stock goes up. Now, if you're in a bear market, you'll find a lot of stocks that are undervalued. So it's a great time to buy value stocks, and also it's a great time to buy dividend stocks because dividend stocks at least pay you income. And if you are near retirement age, or you're looking to pivot in your life and you just want a reliable passive income, you don't really care for the bigger returns on the stock market, you just want a stable income, then you can just start with again and focus on dividend investing, which you'll find a lot of YouTube channels actually focus on is just dividend investing. But in my opinion, one of the best investors in the world are ones that do dividends investing, value investing, and growth investing. Anyways, hope you found this video very helpful. If so, hit that like button, smash it, and let me know so that I can create more of these videos for you. Be sure to check out my description below. I have a link to Wealthsimple Trading app, which is the first trading app in Canada that gives you $0 commission when buying stocks. So be sure to check out that link below. Thanks, and I'll see you in the next video.